Today is March 16, 9:48 a.m. We are looking at GM, General Motors, trading at $34. You'll see it's currently pretty flat, and there's something quickly unusual about this I wanted to point out. First off, technically, it's sort of at a support. It's been dropping the past few days. It's at the support line at the beginning of the year at this $34. But keep in mind could go down lower at this support level where it made its yearly low at $30. This support here. But this level here is interesting. It's been dropping this much and consecutively, and today may turn green, or it seems to be bottoming out. We are at oversold conditions on the RSI. So let's take a look at the unusual options. And so this is something I wanted to point out why we are looking at GM. At 9:32, right when the market opened, we had a hedge fund or a large institution investor put in this June 34 puts, 500 of them. Okay, so what did they do? We believe they sold the puts. They are selling puts, taking advantage of this bottoming process of GM, and they don't mind owning GM at 34 strike price. You'll also see here at 9:31, there was also these 31 puts also being sold at a closer date in April for 490 and 490. This looks like the same institution doing this, and then you have the 60 calls also being bought, bullish. So these puts that are being sold are also bullish, and we can take a quick look at it. So this June one here that we're looking at here, this is the 500 contracts here. You can see here at the volume bar here. And so here, if we look at the Analyze tab, you'll see here, this is the trade. Okay, they had sold it for $295, and we're here right now at GM. And so by expiration date, as long as GM is above $31, this is their break-even point. They're going to be profitable, or they will not be at a loss if it's here. So this 31 point is that support level that they the next support level that they've created. So by selling that put, they're actually creating kind of able to capture that that secondary support level here that we were talking about earlier in this video. So they are able to take advantage of both of these supports by just selling that 34 puts. And then we had that other order also selling the 31 puts, which is also another bullish bet. Or it could just stay around this range and trade around, and it's still profitable. So you can see here it's above that zero line here, so it's all profitable as long as it's this blue line is above that. That's profitable. So and the other thing to point out is because it's they're selling the 34 puts, that means they're willing to buy 100 shares of GM, and that takes at $34, so that takes $3,400 per contract that they would have to pay up if it does fall below that. So for something like that, you could quickly do a multiplication of that. 3,400 and 500 of these contracts would be a $1.7 million purchase of GM. So that's a large institution with that kind of money to just buy GM. So we are going to be doing this trade because this is quite interesting to sell these puts right at the beginning of the open market once they did their research and decided to quickly make this trade. This is they must have done their research, right? Like the day before while the market was closed when options are not trading. Okay, So this is again the support levels, and so watch for this GM. It will trade around here. As long as it's trading around here, or it can go up, it's all profitable for this trade. All right, so if you like this video, like and subscribe, and hit the bell icon if you want to be notified whenever we see unusual options, and we'll report it to everyone. Thank you and good luck.